All right, everybody. Still Monday, April 15th, 2019. This is my lovely post-market wrap-up. Today was a zero. Markets did essentially nothing despite the President of the United States' second call for quantitative easing. Okay. It's really the issue with China trade pushing on this market right now. We're not hearing enough positive things. And the fact, in my opinion, that the United States here, the Trump administration, is making concessions to China proves to me that, and it should prove to you, that we are not in a position of strength. And again, we're losing hundreds of billions of dollars because of the trade gap. Very simple. Look it up if you do not understand how this works. There were a couple of other things feeding into why this market really did nothing today. I mean, we finished flat. Now, let me just read this to you real quick. The New York Manufacturing Index is showing subdued growth, and the outlook slumps. This is right off of this is from bondbuyer.com. You might want to check out this site. They have a lot of good stuff here. So I guess the economy is not so booming, hence the president's call for more quantitative easing. You know, someone posted, well, you know why this index is low, Greg, is because New York fights everything that the president says. Well, maybe if we had a dictator, I guess things would be great then. I say, why don't we just get a dictator next time? How about you? You can't make this shit up. This is the mentality of some people. I don't want a dictator. I don't think you do either. But some people would rather have a dictator. All right. So it's pretty simple to understand what happened today. There was a little fear in this market. We saw some cash make its way into the safety of debt. Yeah, believe it or not. I don't know how people believe that, but that's the case. But the market didn't do anything. I mean, we were essentially flat all day. There was one attempt for the market to drop. The Dow was down almost triple digits, and then it got propped back up. I think we had a fractional loss in the Dow. Nothing. A big zero. So what can we expect? Just like I said Saturday, we're going to hear more about how great things are. Don't look here, look here. Forget the money velocity, everyone, that we are near historic lows. No, our economy is strong. We're booming. You know that. But we need more quantitative easing. Sorry to tell you that. Yeah, I don't know why, but we do. Just to prop everything up. Because the stock market should be 10,000 points higher. But if you remember just a few years ago, the stock market was in a big, fat, ugly bubble. No. It's not the case right now. It's just great. As a matter of fact, it's massively undervalued, according to President Trump, because the Dow Jones Industrial Average should be 10,000 points higher. I am not pulling this number out of a hat, okay? Look it up if you don't believe me. Look, it don't matter anyway. We know where this is all going. It's a mechanism. It's a crime. As a matter of fact, Jim Grant, you know who the Jim Grant is? A Fed observer. The guy's very smart. Although, this guy here has called the Fed better than him. That's the truth. Look at Jim Grant's record. Look at mine. Can't argue. But Jim Grant said that he must watch my work. Jim, I love you, man. You're a good guy, and I think you got a good heart. I mean that. And he's saying that this Federal Reserve interest rate suppression is a crime. Well, hold on a minute. I've been saying it's a crime in progress now for I don't know how long. Yeah, it's true. It's true. But again, it's all part of the greater plan because Q says so. Really? I don't know. I don't know anything about Q. But I keep getting messages, Greg, you need to follow Q because Q is telling it exactly like it is. A nameless goes by a letter? No face. No one even knows who this retard is. But it's all good. This is the mentality of some. So, with that said, this guy who goes by a real name and a real face loves you, and I'm going to let you go, and we will resume the loveliness in the morning. Yeah, I'll see you then.